Hey everybody, Rick Mount with VIP Independent Mortgage. Happy Friday, July 23rd, bringing you this week's market update. So, hey, the title of this week's market update is It's All Greek to Me. I say that a lot because I'm confused about a lot of things, but generally that's an old saying. It's all Greek to me, meaning you don't understand. Well, you're probably going, I don't understand. What does Greece have to do with my mortgage interest rates over here? Well, Greece is trying to finalize a deal with its creditors that has a big impact on the global economy, whether they're staying in the Eurozone or not, whether the austerity measures and the deal that they reach is going to allow them or put them in a capability of being able to rebuild their economy and get themselves out of the hole they're in. So the markets over here are watching that very closely because it has a direct impact on how people invest their money in things such as mortgage-backed securities. So because of this recent kind of uncertainty, or actually it's not recent, it's been talked about forever, the mortgage-backed securities market this past week has actually done fairly well. So when it does well and those mortgage-backed securities trade well, interest rates tend to improve. So what we're seeing is the interest rates on the 30-year fixed rate and the 15-year fixed rate have improved slightly over the last week to 10 days. As reported by the Freddie Mac weekly rate survey, the 30-year fixed mortgage rate delivered to Freddie Mac now is averaging 4.04% with a 0.6 points. With the 15-year a little lower than that at 3.21 with the same 0.6 points cost. So you can see in the historical averages we're still in a really great spot interest rates. That's helping stir the homeowners market. Buyers are out there looking and it helps with people maintain home ownership with refinancing, debt consolidations, home improvement, things like that, because the cost to own or cost to borrow is so much cheaper historically speaking. So we'll keep a close eye on that, but keep in mind the general consensus is that rates will continue to rise, and a lot of it will be directed by our federal chairman and their monetary policy on whether to keep rates and the interest rate market low or whether to start raising our interest rates and things like that. So we'll watch that closely over the next few weeks. Big news announcement is the Consumer Financial Protection Bureau has finalized the rules and the actual implementation date for the Know Before You Owe, which is TRID. TRID stands for TILA and RESPA disclosure integration. Its design is to consolidate and improve the disclosures given to the consumers by us as lenders to help them have a more clear picture and being able to make a more informed decision. It also has some additional wait periods and safeguards in place for the consumer so that they have ample time to review their loan documents and don't have to go to a closing table under duress or out of an emergency. So this is great by intention. Some people are a little worried about an unintended consequences that it could unwantingly delay some closings. So we'll see how it gets implemented and how title companies and escrow companies grapple with the changes as well as the lenders. But the impetus behind it, protecting the consumer, simplifying the disclosures, I'm all for that. So we'll keep you abreast as we continue to move towards that October 3rd date for that implementation. So keep in mind, hey, we're here to help you, whether it's to understand the math behind mortgages, your loan options, your purchasing power, how to efficiently manage the debt on the properties you already have, just to answer questions for you. So feel free to reach out to us via our website, Facebook, LinkedIn, YouTube, any way you can get to us, or pick up the phone and call the old school way. Stop by and see us. We're here to help. We look forward to working with you. Make it a great week.